It's been a real rocky, crappy last few months for everybody in the UK and around the world. In terms of COVID-19, it's had a very devastating impact, not necessarily across the board, but on lots of industries itself. Now, my name is Mahmood. I'm a numbers guy, an accountant that helps businesses improve their money mindset, make money, save time, and actually enjoy what they're doing in business. Now, my initial scheduled broadcast today was going to be talking about business goals and objectives. Absolutely important topic here, but having spoken to lots of clients, lots of people out there in the world of social media, etc., I think what is more pressing to talk about today is about the new job support scheme that was announced about 24th of September by Rishi Sunak. He's cleared it with me and he's allowed me to give you an update today. Now, the broadcast on today is not just telling you the details of the scheme, which is what I'm going to go through. I'm going to show you some illustrations, but I'm also going to share some practical tips with you about, armed with that knowledge, if you are in a situation where you are employing staff, you've got some tricky decisions coming up, you've got some very painful decisions to think about, but before you do that slash and burn, before you think of what's going on, let's cut through the noise. Let me give you an overview about what the scheme is, the key conditions, and not only armed with that information, I've got some lovely numbers to show you, it's about what can we do in terms of decision making to actually factor those numbers in and actually try and navigate our way through. In addition, apart from the job support scheme that I'm going to be focusing on, I'm also going to round up at the end of the presentation the additional support that's out there, the current, in terms of additional bits of money, additional support that you can have with your business here to actually help it sort of power through. So I'll give you a roundup on that. There are some bonuses, some Brucey bonuses. And I believe last night, as I was relaxing at home, thinking, great, I can have a nice Friday evening relaxing, Rishi decided to step up and announce an amendment, a new update to the job support scheme here, which is going to be really positive to a lot of us out there in terms of where you as the employer do not have to put your hand in your pocket. So this is hot off the presses as of yesterday, really. So I've digested what I can. I think I've managed to avoid the bleary eyes there as well. And can I just give a little health warning before we dive in to the presentation? Two things to bear in mind. Number one, if you've got comments or questions to ask, by all means, please add it in the comments box. I'll address them if I can as we go through the presentation. If you're coming up to watch it on replay, everybody, fantastic. Thank you very much for your company. Stick the old moniker, #replay there, so I know you're out there. If you've got a comment to make or a thumbs up, or you think it's actually a bit rubbish and you want other things to be talked about, that's great. So #replay if you just come onto the replay, so thank you for your company. If you've got questions that are in relation to the job support scheme, COVID-19, what to do next as such, by all means, add those into the comments box as well. And at the end of the presentation, apart from a little roundup, it's a bit of a Brucey bonus. I'm just going to talk about what we can do next, when we've got all this information. This is very much a practical presentation, by the way. So this is not just saying, here's the government guidance, plow through that, lose the will to live. It's about understanding what the landscape is, understanding how it applies to your business, and understanding how you can stop your head imploding and getting really depressed and anxious, and armed with that information, take yourself from under the duvet, hang on to it, and I will give you some practical suggestions, by the way, that it may not be as bleak. No, I'm not saying it's easy, by the way, to get on with this. One other thing just to mention, as with all government schemes and all HMRC-based schemes here, the devil is in the detail. So the information I'm presenting to you today is a snapshot, it's an overview of the JSS scheme and other mechanisms I'm going to talk about towards the end of the presentation. The policy detail, the actual detail about how we do it, the mechanics, has not yet been distributed, has not been published. As you can imagine, with the scale of what's going on at the moment, to give HMRC their due credit, they're busy having to put what the detailed rules are. The earlier schemes are also going to shape, by the way, what I'm going to present you in terms of how that's slightly different to what you may be used to there as well. So again, devil's in the detail. I should keep all of you informed as we go through. As soon as I get updates, obviously not me personally, well, I don't think Rishi is going to communicate with me directly, but if he does do, once I grab that information, once I get it, I'll distill it, I'll translate it into English, and I'll share it with you accordingly. Towards the end of the show, by the way, what I'll do, if you want to be kept regularly updated with what's going on, then I'll give you some details. You can add it to our family sharing list. We don't stalk you, by the way. So we have people on our mailing list who aren't even clients, but they just want to be kept in the loop and find out what's going on, not just with COVID, by the way, but in the world of business. Let's crack on with the show. So I'm going to do a bit of a presentation in terms of PowerPoint. This is not going to be a death by PowerPoint session, by the way, but it's a good thing for me so I don't go off and talk about giraffes and aardvarks. Keeps me focused, but it also shows us a summary of the key points that I'd like everyone to take away from this presentation. Now, I know you're sitting at home thinking, great, we've reserved a spot, just get on with the show. So at the bottom of the screen, nice little ticker tape. So I'm going to go through on this next bit about the job support scheme. That's the new version. I think of it as Furlough Scheme Mark 2, or brother or cousin of Furlough Scheme. And then remember, there have been some changes since yesterday. So literally 9th of October, Rishi Sunak announced some amendments to the scheme. We'll look at the overview. There are rules. And I'm also going to illustrate with some numbers as well. It wouldn't be anything unless we had some figures to come on with it. So if I can do this correctly, let's go the power of presentation. Bang. So you've got me in the corner of the screen. So remember, if you've got comments, questions, something's not quite clear, please chuck them into the comments box and I will deal with them as we go through. So first of all, now the job support scheme, it was announced as part of the Chancellor's winter recovery programme. He probably thought that was it. I've made the announcement. The budget that we normally have in autumn was cancelled, and that's going to be the end of it. It's a rolling feast. The landscape is changing dramatically. Pressure points from business support groups, from individuals, has meant that there will be more changes, I would predict. So don't think this is the last word by any stretch of the imagination. Now, the new job support scheme actually starts in terms of eligibility on the 1st of November 2020. So the current furlough scheme that we've got, I'll give us a heads up here, there's going to be similarities in how it applies here. It's the claim periods run between the 1st of November 2020 and the 30th of April 2020. The Chancellor's also said, by the way, he's going to review it after the first 3 months just to see if there's any what they call tinkering or adjustments that need to be made. So the new scheme starts the 1st of November. The current scheme, by the way, finishes at the end of this month, and you've got a 30-day window to actually make any claims under the October scheme. So don't let time run away with you. Make sure you get those claims in, otherwise you will lose out on them. So new job support scheme starts on the 1st of November, initially set to run up until the end of April 2021. Now, there are two schemes. Now, up until literally yesterday morning, by the way, there was actually only one scheme in town. Since the announcement yesterday, there was a second scheme. And this second scheme, without being a party pooper, by the way, is where, under certain conditions, the employer, let's try employer even, the employer does not make a financial contribution. So scheme one, there are certain conditions in terms of amount of work, which I'll go through in a second, and the employer has to make a contribution. In this second version that was announced last night, if the conditions are met, the employer does not have to make a financial contribution. The contribution comes via the government, which in reality is all of us as taxpayers. Now, the key things are, in terms of the scheme conditions, let's run through that, is first of all, there's a minimum criteria in terms of how much time an employee has to work for you. So the minimum amount of time under scheme one is that the employee must work a minimum 33%, let's call it third in old money, of their normal regular hours. Now again, that phrase regular hours, by the way, hasn't yet been defined, but based on the previous furlough scheme, which is what the government have referred to, it effectively means your contracted hours where you can factor what's called regular overtime in there as well. In the illustrations that I'm going to show you later on during this presentation, we've assumed that we've actually managed to calculate what that regular thing is. So you've got to work, your employee's got to work at least a 33%, brackets a third, of their normal regular hours. Under the second scheme, and that's effectively where, due to a lockdown, your business is not able to open. So typically bars, clubs, bowling alleys, adult establishments, whatever. If you're if you're forced to close because of local lockdown restrictions, obviously it's not going to be possible for your employee to work necessarily. In that situation, if they're furloughed, that term still applies here, then the government will make the contribution. You as the employer don't have to. Other conditions as well, as we go for the schemes. Now, I said there is a parallel. Let's go for scheme 1, which is slightly more involved. The employee that you effectively, I'm going to use the word furlough, by the way, because that's basically what's happening, is the employee is normally working at least 33% of their hours. They have got to have been on your payroll, by the way, and what's called an RTI submitted, i.e. you paid them some money by the 23rd of September 2020. So if you take somebody on after the 23rd of September, you can't put them under this scheme. So they've got to be on your payroll, and you've got to have at least made a payment to them, which you've notified HMRC of by the 23rd of September 2020. One other thing to bear in mind is if you've not previously furloughed staff, it makes no odds. You can forget about what you might have done previously. So this will be for people who may have missed out originally. So if you took somebody on effectively after March 2020 and you've not previously furloughed them because you've not been allowed, they can be put under the job support scheme. So minimum level of work, you've obviously got to pay them for the contracted hours. And that makes sense. If they're working X amount of hours, you've got to pay them for that as well. Under the second scheme, you as the employer do not have to make a financial contribution. Now the employer, as I said, and again, I'm not going to talk about numbers yet, I'm going to talk about numbers later on. So you work typically a number of days a week. You make sure the employee works at least a third of those contracted hours. You as the employer have got to make a payment. Now there is a limit, by the way, as there is in pretty much all government type schemes. So under the old furlough scheme, in the month of October, we are limited as employers to how much the government will give us by way of, I call it compensation by way of grant. There is a financial limit, and there is a financial limit here. Now, as I suppose a visual idea, by the way, the scheme supports predominantly, it's more, if you call it beneficial, I'm not sure that's the right term, for what I call basic rate taxpayers. Now, the claim limit is as such: for each individual employee that you're claiming under the job support scheme, the financial limit from the government is £698 rounded up. It's actually 697.92, by the way, but I didn't want to be a typical accountant that give you to the pennies. But let's just say for working reference, £698 is the limit. So once we go through the calculations, we cannot claim more than £698 from the government in respect of that individual employee. In terms of weekly, by the way, that weekly figure translates to 161. So the cap by what you can claim by way of grants is 161 per week, or £698 per month. If you go under the second scheme, by the way, and that's whereby your business establishment is shut down, and by way of a local order or a central government order. So again, one imagines that's going to be things like hospitality industry, adult establishments, I don't know why I mentioned that again, bowling alleys. It could also include like travel agents. If you are asked to lock down, your business cannot operate, then the limit is £2,100 per month. That's the maximum that you will get back from the government. Other things to bear in mind, by the way, on this, everybody, is the minimum period for which you can effectively claim this. So your employee must be, if you want, part-time furloughed for at least 7 days. You can rotate. So a lot of clients of mine, what they've done, they've been juggling the staff rotation. Staff rotation is quite popular and quite common in the hospitality sector. So you might say, okay, 1 week on, 1 week off, that's perfectly feasible. But it's going to be at least a minimum 7-day duration. Again, when the guidance notes are published, and the detail comes out there may be a slight refinement on those rules. And before going to the next slide, I'm just going to say hello to here. Obviously, no vanity on my part. I'm just going to share that comment by Richard. Richard, that's very kind of you to say so. Thanks for getting this information. Well, I think it's really critical, Richard. I know you guys have been working really hard, keeping your business going. It's a really uncertain time here. There's a lot of things going through. I run my businesses through times of recession, through times of economic uncertainty. This one here is probably, even in my experience, one that, yes, it's volatile, it's uncertain. There are similarities to previous, shall we say, economic downturns, but this one is effectively a little bit more turbulent here. So it's really critical for me in terms of what I do to make sure I can get that information out to everybody. So Richard, thanks very much for that thumbs up, and I hope you guys are doing well. So as we go through this is all recorded by everyone. So if you need to go off and powder your nose, grab a drink, it's going to be here on the replay. If you're coming on for the first time, hit #replay and you can get those there. So let's go for the next bit. Now, the claim period, as we said, typically you do this, have to do it at the end of the month. Now, the real big difference on this one, by the way, and it's going to come across in how I produce the numbers, is the timing of it. So, in the new job support scheme, you claim effectively in arrears. So, you process the payroll for the month of November. You make the claim at the end of November. You cannot make the claim in advance. Claims are done on a monthly cycle. So if you've got weekly paid employees, that might create a bit of cash pressure. And I'm going to share some thoughts with you later on about how you can manage that cash pressure. It's paid in arrears. So what happens is you, as the employer, have to pay the employee first on the contribution. You then make the claim back from the government and you get some of that contribution that you've made back from them. So if you've seen guidance where it says the hours not worked, it's divvied up in a certain pattern, remember that's correct overall, but fundamentally you've got to pay employees first of all to make sure they get a minimum level. You then claim a proportion back. So there's that arrears, that time delay. Think of it like in your business where you may have a customer that you provide services to and goods to. You provide those services, you've got to pay staff in the interim, and then you have to wait to get paid by that customer. So this timing thing is really quite critical if you've decided you've got an action plan to try and figure this out. NIC and pension, this is in line with what was happening in effectively September and October. And what's said is in those 2 months is that on the old furlough, well, it's not old because it's still going on, under the furlough scheme, you as the employer have to pay the NIC and the pension contributions. In the new job support scheme, which kicks in November, you as the employer are liable to pay the employer's national insurance and the employer's pension contributions as well. So that's in line, if you want, with what's been happening in September and October. Now, there is something called a job retention bonus, and I want to flag it up here, by the way. It's linked to me to furlough, and this bonus, which I'm going to outline today, well now, I would certainly say take it into account when it comes to your planning, when you decide what to do. Now, there's a job retention bonus, and here's the summary. For each employee that you furlough and you still keep on the books, you continuously employ them, between effectively in the 3 months up to the end of January, it's actually the 5th of February 2021, but let's say the end of January, if they earn at least £1,560 over that 3 month period, and they're paid in each month, they earn at least £520 a month. So if they are furloughed, you continuously employ them, they get paid each month, and you declare that to HMRC as well, and it hits that threshold, then you can get a job bonus, a retention bonus of £1,000 per each employee. So let me run that. Now, the good thing about the job retention bonus, by the way, it's cumulative earnings of 1,520. As long as they receive something in each month, then that's fine. So you could actually pay somebody £400 in month 1, £200 in month 2, and then pay the balance in month 3. However you want to shift that payment, and again, it's a requirement to actually think about your rostering and the hours. Then if you tick those boxes and they get paid 1,560 total, and you've obviously submitted the return accordingly, then you will get the £1,000. So I'm just going to flag up a question by Richard. So if you furloughed someone and you put them on, yes, you are. So good question. Now, again, recent updates on this one. So if somebody's on furlough and then you go onto this new job retention scheme, job support scheme, you can still claim your bonus. The conditions are, by the way, the employee must either be, if I'm going to use the word furlough because I think it's still relevant, furloughed under the new job support scheme or previously furloughed under the old scheme. And when I say old, it's still current, but it's going to run out at the end of October. So the answer is yes. They're either not being furloughed historically, but they're going to go on the job support scheme. As long as they're continuously employed for 3 months, receive that minimum threshold of income over that time period, then you can get the bonus for it as well. If you previously furloughed them and you submitted that and you still continuously furloughing them, then it applies. So hopefully, Richard, that's answered your question. So again, the bonus, by the way, £1,000, just to give you some heads up, by the way, the minimum pay that you've got to do, if you paid somebody at minimum wage, then £520 a month on average is around about 14 hours worth of work a week, if I can say it, get my teeth back in. So that's about 14 hours worth of work per week. So again, some real interesting decisions. In terms, as I'll expand on that in some future slides here, it really means you've got to have a good understanding about your workflow pattern. You've got to have a good understanding about how you can rotate things. So there are going to be some extra thought processes going on here, but it's certainly worth considering that that bonus could actually be something that is a positive thing in terms of there. Obviously, HMRC being what they are, the bonuses are taxable, by the way, so they still do count as income in the company. Right, let me just try and get this thing moving on. Now, rules, there are rules and everything. Now, remember, this is not university. Now, one thing I've observed about the existing furlough scheme is, unfortunately, there are some employers who made mistakes and incorrectly claimed furlough. Perfectly innocent mistake. But unfortunately, there are some employers also who are a little bit naughty, shall we say, and actually basically try to shaft the system. So effectively, HMRC are a little bit more assertive, if I can use that term, on this next scheme here, and they've actually tightened up their rules and regulations. That's why I suspect that's why they've said you've got to pay the employee first and then make the claim afterwards. Under the previous scheme, of which it's still running to October, you can actually get the grant, delay paying the employee and pay them thereafter. But unfortunately, there was a little bit of naughty activity going on. There probably still is. And that's why it's really critical. So they are tightening up. Now, this hasn't changed, by the way. You've got to keep records. If you do not have evidence, for example, of time spent, normal contracted hours, how much they've been furloughed for, and HMRC ask you for that information. And my suspicion is, by the way the resources are being diverted in the background, they're going to put more resources to police, to monitor, to review, to audit what's been going on, because we're talking an incredible amount of money that's gone into the scheme. If you don't have those records, if you can't substantiate it, then obviously you've got issues there as well, and you will be asked to claw it back, to give it back. And depending on the situation here, you may also be fined and prosecuted as well. That's obviously an extreme. Now, most people, certainly our clients, have got us to look after it for them and do the claims. So obviously from our end of things, that's all tight. But make sure you've got the evidence as an employer to, hours normally regularly worked. Obviously, you should have contracts in employment, effectively records of time spent, all that stuff. Make sure you've got it. As we said, employees are going to be in the scheme. So if they're not on your payroll by 23rd of September, then tough. Obviously, it might seem obvious, but just to clarify, we're not talking about freelancers. So if you engage freelancers, they do not come under this umbrella. We're talking about employees, not freelancers, not subcontractors. Another thing to bear in mind, everybody, this is not just you as an employer saying this is what you're going to do, everyone. You have to get agreement from your staff. So if your staff have got an employment contract, and Jess Morano has got a great point, I'm going to get to come on board here in a second. So if you have a contract of employment, remember, job support scheme and furloughing do not circumvent legislation. It doesn't negate HR. It doesn't negate employment law. Employment law still is in operation. So you have to have agreement of your staff, and you have, I would suggest, on record that you've got that agreement signed off as well. So what we do with our client base is at the very start of the process, going back several months, is to actually advise, suggest, give them letters, discuss the processes with them, and all of our clients have gone through that process of actually communicating with their staff, actually getting that acknowledgement back, having those discussions and having that back in badge. You cannot impose this on an employee because you may be in breach of contract. You have to have their universal agreement. The idea is, by the way, of regular pay. So when we work out the calculations, it says, when we look at the next few slides, in terms of look at the numbers, the idea of regular pay is not what they receive while they've been on furlough, by the way, but their normal contracted pay. It's going to be in line with the previous furlough schemes. And again, I keep saying previous, by the way, because we still got furlough. But the furlough schemes that have been out there, how that regular pay is calculated, my view would be, from what I've read, it's going to be on the same basis. So if you've got a fixed salary, hasn't changed, that's straightforward. If you've got fluctuating pay, then it's all about averages or previous years that you look at. So that reference point, yes, will come in. We can still do some modelling. We can still do some number crunching, even if the detail has not been given to us. Now, I love this comment here. So, just Morara, that's, yeah, agreed totally, been cautioning employers since 26th of March. I'll be interested to know what the response has been by employers. Most employers that I meet are decent guys, decent women, decent businesses. They want to do the best. They are battling with lots of turbulence, lots of tough decisions are being made. No employer, in my experience, by the way, as a general rule of thumb, I've met some crappy ones, by the way, but generally speaking, employers want to do the best for their staff. They recognise they've got to invest in their staff team, but let's have a bit of, so not respect, what's the word for I'm looking for? A bit of understanding about businesses here. You've got a situation where, yes, you are wanting to keep your staff on. If you've got a good staff team, if you've got good people working for you, nobody in their right mind wants that to go for a number of different reasons. However, you've got a situation where there's no money necessarily coming in, and there's pressure points on that. And in terms of business sustainability, business continuity, that's some tough times out there. And everybody, you know, is suffering to some extent, whether it's the business themselves, whether it's the individuals who work for them. So, you know, these are tough things here. So there are rules, make sure you follow them. Otherwise, you'll be in hot water. Okay, let's get back here. Just a few little glitches here, everybody. So hopefully we get back on here. So this isn't quite sort of Netflix standard. So numbers, what would be a scheme unless we actually looked at some numbers? So I'm just going to go through some headline numbers here. And this is somebody called Serena, who happens to be the name of my wife as well. She works a regular 5-day week. Now, the top line refers to her normal regular wage, and she earns £420 for her 5-day week. So that's your start reference point. Now, what I've done, I've gone through 5 options in terms of the hours that that individual, Serena, actually works. And as we would expect, you pay somebody for the hours they've actually worked. You can't, escape that. So I've gone from the 33%, which is the minimum level required, up to a 70%. Obviously, once you go past a certain stage, it's just, you're going to see it just tapers down. So if she works 33% of her time, i.e. 2 days a week, sorry, not a third of that week, 1.67 days, that she gets paid £140 for that third of the week. Now, I've specifically emphasised employer top up here. I'm just going to put this frog to sleep, if you don't mind, for a second or two. I know it's not very romantic, not very nice to watch somebody drink some water. You're going to have the rasping voice coming through if I don't get that water lubricating that larynx. So £140 they get for the hours they've worked. On top of that, the employer initially has to pay out 187 on top. So the employee's weekly wage packet is £327. Obviously, national insurance calculations, tax calculations follow from that. Now, the employer then makes a claim in respect to that weekly wage, and they receive back £93. So if you look at it as a seesaw, 187 has to be paid out first, £93 is claimed back, so the net effect is going to be about £94. So we need to know that, because when we come towards the end, we think about cash flow. Cash out is 187, cash in is 93, the overall impact is 94. As a rule of thumb, by the way, here's how it's going to work. So the time not worked, so if I look at the 40%, so in this case, Serena works 2 days a week, she gets paid for 2 days a week. She gets, her gross for that 2 days is £168. The employer tops it up by 168. The wage packet for the employee is 336. Not quite the full 420, and the government then contributes, you make a claim for the £84. If you want to visualize this is how it works. So of the 2 days that Serena works, she gets paid for it. There's 3 days that she's not working. And effectively that pain, that shortfall is shared amongst 3 parties. 1 day of the week, the employee absorbs. They just don't get paid for that, assuming they've agreed to it. 1 day of the week, the employer pays for, and 1 day a week, the government pays for. That's how I would probably visualize it. So from a 5-day week, you get paid for the time that you've worked. The rest of it is effectively split 3 ways. And that pain, that shortfall, was shared amongst those 3 parties. As you can see, the more the employee works, so we go up to 70% of the time, then the job support grant, as you'd imagine, drops down. The employer top up diminishes because they're actually now paying more for the hours actually worked. Now that's weekly. Remember, there is a cap of £161. So you cannot effectively claim back more than 161. Now, what's not clear in the guidance, by the way, or what's been published, is if you have got what's called a higher rate employee, then because the government cap is limited to 161 per week, it doesn't actually say anything yet, actually, if your 1/3 contribution, is also limited. So that's the bit we're going to have to wait and see. Now, I've done the same sort of thing, by the way, everyone, but on a monthly basis. So somebody's regular wage is £2.5 a month. If they go for the minimum, they work at least 33%, then effectively what happens is they get paid £833 for the time they've worked. Taking the top up into account that the employer provides, which eventually they get money back, 556, the employee gets £1,944. Again, if you want to look at whole numbers, if you look at the 40% column, again, I'll share these slides if anyone wants them, but they're on the broadcast. So if you work 40% of the hours, you get £1,000 for the time you've worked. The shortfall, the £1,500, effectively, the government and the employer will pay 1/3 of that each. The other 1/3 is absorbed, if you want, by the employee. So it'd be a good idea, by the way, to also share this with your staff, so when they can do their own personal financial planning, they know what's going on. Now, this is scheme number, a comparison, by the way. So what I've just done a quick comparison on a weekly and a monthly basis in comparing what the October furlough would have been like, and I've done this on a like-for-like basis. So this is part-time furloughing in October, and what that would look like under the new job support scheme. So effectively, if you go across the top, from 33%, which is the minimum hours worked, the change in the overall employer top-up is an extra £38. The more hours they work, it's £17. As far as the employee's gross pay, there's parity, by the way, so a bit of rounding difference on the first one. So effectively, the extra bit the employer has to top in, and the extra loss by the employee, as you can see, they're around about from £38 from the minimum up to £17. You will be worse off, but there may be some positivity, if you can call it that, when we factor in the job bonus as well. Let's do the same thing, same idea. If you look at somebody who's monthly, then there's an extra £222 when somebody's on £2,500, and the employee loses out another £222 as well. So again, the pain is felt between both parties. So again, scheme 2, that's where we go. There we go. Apologies for this. This slideshow is running away with me. Yeah, just Marina, I'm going to share that slide with yours. That's a great comment that you've made, but I'm going to show this in a moment. In fact, actually, what I'm going to do, I'm going to take that slide off and let me share this comment. I thought it was another way of looking at it. Yeah, correct. So minimum hours work 33% of normal, leaving 66 over, and basically, effectively, a third, and a third. So again, if you like fractions, if you like that idea of proportionality, then look at it that way. But remember, so thank you for sharing that example. That's a great way of looking at it. Remember, in terms of visualization is one thing, rule of thumb, you need to do the detailed numbers, and also remember, there is a cap on how much you can claim back from the government. If you've got employees on, my apology, I keep messing your name up. So Jasmine, thank you very much for sharing that. And again, I hope you forgive me for mispronouncing your name even, if I can say it. So yeah, that's a great way of looking at it. So again, good visual, detail for your cash flows though, everyone. Perfect. So thank you for sharing that. Let's go back onto the slideshow. It's going to be pretty much saying the same sort of thing, but on monthlies. Now, on the, if I go back to the previous one, it's going a bit all over the place. Let's go. So job support scheme number 2, by the way. So this is where your premises have been forced to close. You're not allowed to open for business. So again, typically hospitality, typically like bars, cafes, bowling alleys, any establishment that's been forced to lock down because of local restrictions, so you're not able to work, then you do not have to make a financial contribution. So somebody, Serena, in that same situation, then the job support grant would be 280, and that's what the employee receives as well. The cap, remember, is £2,100 per month. And if you look at the monthly, again, no work being done, on £2,500, the employee receives 1,667, and the obviously, which is equivalent to the job support grant. So there's no cash outlay if you've been forced to do that. This, by the way, was hot off the presses last night or yesterday. So therefore, again, details coming out in the news feed today. I'll share that later on if we have anything new to share. Other couple of things to mention, by the way, before we look at the last few slides. You can't put somebody on redundancy. So if somebody's serving a notice of redundancy here, you can't claim job support scheme for it. What's this next one? What else? Now, I'm just going to overview these. If there's a desire, I'm going to do it anyway. I'm just going to share some more detail about this later on. We have published stuff on the website, previous broadcasts. So if you're thinking, oh, this is news to me, I'd like to find out a bit more, obviously drop me a line. Check out my website, which I've given there, obviously, proactiveresolutions.com. There's loads of news there, links on the social media feed to broadcast. So it's all out there, everyone. We've just tried to distill it, take it from all that noise that's out there and make it easier to digest there as well. So what else is going on? VAT, as a quick heads up, if you've deferred your VAT up to June 20, where it was moved to next year, HMRC and the government are now allowing you to pay that back over interest-free instalments. 11, so if you've got a VAT bill that you've delayed, it was due to be paid next March 2021, then you can actually defer that. No, it's not cancel it, by the way. You can defer that and repay it back over 11 interest-bearing instalments. Interest-free, remember. Personal tax, again, if you've deferred, not wiped out your payments on account that were due in July 20, they're now due in January 21 with your tax bill. If you're thinking what's a payment on account, then obviously drop me a line, I'll explain it further or do another broadcast. But if you're a taxpayer, you've got a personal tax return to do, you've got a payment on account that crops up. If you've delayed it, which was done automatically, but it's due in January 21, you've done your tax return for 1920, you think, my God, how can I pay all this money? Then what can happen is that effectively you can also have a time to pay arrangement. If it's under 30k, you can actually do the claim yourself online and it'll be given to you. If it's over 30k, then talk to the debt management service. Loans, the bounce back loan extended to the end of November, repayment periods over 10 years. And there's a cash grant, by the way. So this again came out from yesterday. So if you've got a premise that's been forced to be locked down, then if your raisable value is under 15 grand, you get a cash contribution. I wrote it down here earlier on, of £1,300 per each month it's closed down. You can claim, you can get it paid fortnightly. So if it's between 15 and 51, you'll get, what do I have, 2 grand. And if it's over 51 grand worth of rateable value, then you'll get a 3 grand cash grant. So again, that's, again, if you've got a premise, it's been closed because of lockdown restrictions, then you've got a cash grant that is now available. We haven't quite there. Let's, I don't know what I've done there. Right, let's go there. So I think, there we go. What next? Well, yeah, there was one other thing that I forgot to bring up here. Let's get back to what's going on. Right, everyone, we've had a bit of a technical problem here. It's me, who's very dangerous when it comes to technical stuff. I'm going to get back to where we are in a moment. Just indulge me. It's wonderful. Just talk amongst yourselves for a second or two. There we go. I'm just going to stop sharing my screen. Come back here. And let's carry on. Let's carry on sharing the screen. Share the screen. There we go. There. We're back in now. Yeah, one thing I forgot to mention, obviously there's the self-employed scheme. It's been extended. I'm just going to flag that up. So yeah, again, 20%. So it's much less generous than the previous one. So Jasmine, thank you for that. So if you're self-employed, by the way, so that wasn't the focus of today's presentation, but good to know, if you're self-employed, you fill in the pages in your tax return as self-employed, then you've got the self-employed grant. By the way, everyone, there is the second phase of the self-employed grant. You've got effectively until the end of this month to claim it, otherwise you'll lose it. Again, if you're not quite sure what that is, then I'll check out the news that we've got and I'll share that with you later on. Now, what else is there? So, having run through that, let's do this. Let's get this slideshow. This is PowerPoint conspiring here. So what do we do next? Now, absolutely critical. So if this information is not making your head explode, if you're thinking, what do I do next? You've got to really sit down and think, right, I'm a business, I've got staff, I want to keep them, what do I do? You've got to do a business map. You've got to sit down. You may be feeling anxious. You may be feeling overwhelmed. You may be thinking, why on earth did I go into business? All those things are going through your mind. It's absolutely critical that you effectively take a deep breath, leave the drinking until later on, and you need to sit down and think about what's happening to your business map. You need to maybe at least do a 3 to 6 month story about and actually figure out what you think is going to go on in your business there as well. Fundamentally underpinning all of this, by the way, you need to do, not it will be nice to do, you absolutely need to do a cash plan, a cash flow forecast. If you're thinking, what's a cash flow forecast? Why should I bother? I've no idea what's going on. Well, usual plug, check out my website, check out our resources page. We've got tons of stuff there on cash flow planning, but you've got to put together a cash plan. You've got to be able to then plug in these numbers from the job support scheme, from other things that you've got going on. You've then got to think about the bonus. The bonus could be really positive, by the way. So it may be short term that you can keep employees on for a certain number of hours that meets the job support scheme criteria. You get some contribution coming back, but actually what will happen is when you get to February of next year and you make a claim for the job bonus, the job retention bonus, that will compensate what you had to pay out. So life is about cash flow juggling at the moment. And it's not just when the things are going rubbish, it's all the time. Get a cash flow plan, and I promise you, it will be liberating. It will give you a clear idea of what's going on ahead, and you can make much better decisions as a result. Okay, folks, that's pretty much it. So thank you very much for sharing your earlobes, sharing some time with me. I have gone on a little bit longer than I was hoping to, but there's a lot that's going on. So the key thing is, don't panic, digest, look at it, think, how does it apply to my business? And do not make rash choices. I know it's a tough time for all of us, but keep the faith, do your cash plan. I've got some more broadcasts coming out, which is going to focus on this here. And again, thank you for everyone who's listened to me this morning, put up with me. Any questions or comments, put them into the chat box. And absolutely great comment there, Jasmine. Yeah, so it's not just financial impact. I'll share this. And yeah, I think that's a great point. If your mental health is not quite there, your mental well-being, absolutely there. You've got to be strong. And I promise you, by the way, everyone, is your strength will come from actually dealing with your numbers. Now, my life is based on helping business owners improve their mental strength, improve their mental mindset, their money mindset, not being scared of their numbers. The numbers are actually your best friend, believe it or not, grabbing them by the scruff and helping them move your business forward here. So take it on board. If you've got any thoughts to share, let me know. Apart from that, I'm going to stop mumbling on now and get some breakfast now. Have a great weekend and keep positive. And what we're going to do, let's go out. I'm going to take my slideshow off the screen, set myself